Hello, everybody. So some of you have told me about Bitcoin in the comments, and I seem to follow the comments to know what's going on with Bitcoin. And many have said, "Oh, what about Bitcoin? What about MicroStrategy?" Well, it's funny because this week, right, one of my favorite stocks out there, Enphase, was down. Almost 30%, not quite, but almost. And in the same span of time, my second largest asset, my position in Bitcoin is actually much closer to Tesla. It's much closer to my position in Tesla than my position in Enphase. But I had my position in Bitcoin go up quite a bit, and I was looking at MicroStrategy. MicroStrategy is a big position for me. In addition to pure Bitcoin, I own Bitcoin mostly the pure way for a brain wallet, but MicroStrategy is up 30% in 5 days, and so Bitcoin is up. But you know what? The only question that I have to ask is so what? Does it change anything? If I quote Michael Saylor, if you're a dentist, you should just focus on being a good dentist and then just put your money into Bitcoin and forget about it. And that's kind of what I'm doing with Bitcoin, because I obviously don't cover it a lot on the channel because most people do not like Bitcoin, right? So it's just the way it is. Sometimes it's tough to reconcile the growth stock crowd with the Bitcoin crowd because Bitcoin is a very macro play, while individual stock picking, growth stock is much more of a qualitative analysis business play. But to me, they're one and the same play. In investing, you can either play on the idea of the numerator and growing that revenue and making sure that revenue grows faster than the debasement of a currency, or you can just buy an asset that will stay flat when the currency debases, when the denominator grows, when the number on that denominator grows, and that denominator is the US dollar. And that's the thesis of investing in Bitcoin, of course, is that there will be many more US dollars out there than there are today, right? And, I've known about and I've owned Bitcoin on and off since 2014. And one of the very formative moments in my investing career was, and I was still newer to investing, right? In 2015, I was like less than 5 years into investing. And I remember selling all of my Bitcoin. And by the way, there were much more than a dozen coins. And I remember selling all of my Bitcoin for $250 a coin. And it was down over 80% from all-time high. I had bought it earlier, and of course, Bitcoin was going to go to zero. It was very obvious, and kind of a negative headlines you see all the time about Tesla, Enphase, HIMS, whatever, pick a stock, right? All of the negative headlines, they're just here for clicks. They're not here for reality. And this is actually a very common thing. I am not the only early days Bitcoiner who sold Bitcoin in the early days. It's actually extremely common. If you talk to a lot of Bitcoiners, it's extremely common that if you were a Bitcoiner in very early days, you made that mistake of selling it for nothing. And I bought back in way later at a way higher price, well into the thousands. And that's okay, but it requires a lot of philosophy. And in Bitcoin, this is what Bitcoiners say. And, I think this will be part of popular culture eventually as Bitcoin takes over the world. And as the ETF is approved, this will become part of popular culture. In the Bitcoin world, what do we say? We say in Bitcoin, you pay the price, you get the price that you deserve. Right, you get the price that you deserve, and I sold at $250 a coin. Therefore, I didn't deserve to own Bitcoin and pay only a few $100 for Bitcoin. And today the price is, what is it, 34,000? Well, today is the price that you see, and the question is, are you taking advantage of that price, or do you prefer to buy Bitcoin when it's $500 or $1 million a coin? That's the question that we ask. And frankly, this is a philosophical exercise. This is an exercise in stoicism. This is an exercise in meaning, and what does meaning mean? What's the meaning of work? What's the meaning of life? This is a deep philosophical field, the field of Bitcoin. And I can tell you I've done a lot. I've done my fair share of philosophy when I see that the asset that I sold at 250 went to 69,000. Right, that's a 276 bagger that I missed on, and it's a feeling, obviously, that I share with a lot of early investors in Amazon and a lot of early investors in Netflix. Right, it's the same feeling, right? If you sold Netflix at $7 and you thought you were real smart selling Netflix at $7, well, it's $400 now a share or something. So it's a feeling that you share, And here's another question that I ask often is like, okay, so if I had kept the Bitcoin, what would I have done? Would I have sold it and bought a nice house? Well, that would have been a mistake too. So better do that mistake early on than do that mistake later on, because when you have an asset that is suited to go up forever because it's a commodity. Bitcoin is a commodity. It's not a stock. It's not like you have binary risk like you have for a stock. Stock new CEO comes, CEO is dishonest, something bad can happen, right? A stock, the government can ban the stock. A stock, you can have a catastrophe of some kind. And if you go deep into the tech and deep into the nature of Bitcoin, you realize that it's nearly impossible to find anything that could stop this asset due to the way that it's built. And I realize that this claim will seem nonsensical to anybody who hears about Bitcoin for the first time, or to anybody who's only spent 10 hours studying Bitcoin. But I can tell you, I've been on and off with Bitcoin since 2014. I've spent well over 10,000 hours studying this asset, and it's it's obvious enough that it is the second biggest position in my portfolio right after Tesla. And keep in mind, this is not just coins acquired at 3,000, 4,000. There are some coins out there that I've acquired at higher prices, right? That I've acquired at higher prices than what it is right now. That's just the nature of Bitcoin. And in my view, the only proper and only way to think about Bitcoin for me is as follows. And that is 1 Bitcoin equals 1 Bitcoin. And you see this trending every other day on Twitter because that's what it means. 1 Bitcoin equals 1 Bitcoin. What does this stand for? It means that you should not judge Bitcoin based on the denominator. You should not do 1 Bitcoin divided by $33,000. Right? And thus 1 Bitcoin equals $33,000. That's not true. The price is not true because the denominator is ever changing. The only thing that is true is 1 Bitcoin equals 1 Bitcoin. And there's a lot of, very deep podcasts you can listen to about Bitcoin. Robert Breedlove comes to mind, but any recordings from Saylor, if you want to listen to those, try to go into like the deeper thinkers about Bitcoin. Those who are more into the philosophy of Bitcoin, and perhaps I would recommend less, Bitcoin podcasters who are more about having fun. Right, I mean, like Peter McCormack, for example, is more about having fun. It's more there's a lot of deep stuff, but it's a lot of back and forth too. Like if you listen to the deeper thinker about Bitcoins, you realize that yes, 1 Bitcoin equals 1 Bitcoin, and 1 Bitcoin is just like language. Bitcoin is very close to language. It's money as free speech, and it's the first language for money. And of course, network effects and networks being networks, languages are networks. It seems only logical to me that this will reach popular culture. You can already make a very fair argument that Bitcoin is the biggest brand. It is a universal brand that is just as known as, say, a Coca-Cola or a Ferrari or an Amazon. So just from that standpoint, Bitcoin is extremely valuable. But the more valuable part about Bitcoin is, of course, is that you can store it in your head. It's money that you store as free speech, right? Take any Bitcoin key, you generate your Bitcoin key with whatever ledger, whatever hardware wallet you want to use, and learn your 12 words in the right order. And then you can store as many Bitcoins as you want in your head, or as many 100,000th of a Bitcoin, right? A Satoshi, as many Satoshis as you want in your head. That is the power of this. Bitcoin is the hardest money on earth. And it is money suited for the 21st century. Why is it money suited for the 21st century? Because Bitcoin is a deflationary money. It's a money that's suited for Austrian economics, right? Not classic economics that has crazy assumptions about rationality and perfect information. No, Bitcoin is suited for Austrian economics. It is my bond alternative. And this is the alternative for bonds that I'll pass on to my heirs if I'm lucky to ever have any heirs. I don't have any children or anything, but if I'm lucky to have any, the Bitcoin that I buy is for them, right? And I think this is the right way to think about Bitcoin. This is the longest hold. Right? Like the Tesla, maybe a 15 or 20-year-old. Enphase, maybe a 10 to 15-year-old. Hold. Bitcoin is a 50 plus year hold. That's why it's wise to just store it in your head in the form of language. Moving on. Bonds. So why do I think Bitcoin is much more powerful than bonds? Why do I think Bitcoin is much more powerful than bonds? Because you're essentially buying the same thing when you buy a bond, right? When you buy a bond, you invest in currency. You invest in the promise that you'll get, I don't know, $10,000 back in 10 years, 20 years, 30 years. Right? It's a contract. A bond is a contract, and you invest in that promise of getting the principal back, say 30 years from now, you're going to get $10,000 back. So you're making a bet that those $10,000 will be the same value as today in 30 years. And of course, you're taking a risk, and the yield, the coupon, is what you take on for that risk, right? So right now, some bonds go for up to 5% yield, the shorter term ones. So you're taking a 5% yield to take that risk about the value of money in 2 years. And the question that I ask is, it's not a question, it's more of a rhetorical question. 15% per year is the debasement. That's a joke. Is that a joke? Is this a joke? Right? In my view, and by the way, over the longest term, we've had 11.79. This was a calculation early on in the channel. 11.79% monetary debasement. This what you see here is the US dollar stock. That's how many US dollars are out there, right? And the more it grows each year, the less purchasing power you have, right? It's about the share of the money that you have, how much share of the money that you have. Mistake that people commonly make is they only use M2 money stock because the data is easily obtainable by the Fed. People often forget about the Eurodollar network, the Eurodollar system, which is dollars held outside of the US, which is bigger than the money stock and makes its way back in the USA through trade of all sorts and of all kinds. So in the future, what if we, and that's what I believe for now we're going to get a 15% monetary inflation going forward over the long run. And keep in mind that the 0% or the tiny drop in M2 money supply we've had over the past 12 months, keep in mind that in my view, this will be compensated by a year where it's going to be 40%. We're going to have a year sometime. I don't know if it's 2026 or 2025, but we're going to have a year sometime that's going to look very much like 2020, where we're going to have 40% in 1 year. Because I believe it's a bluff. Because you can't do otherwise. We saw this. We saw 2 days ago 105 billion that they're going to approve again of money that we don't have. Like, we know this is the way. So when you buy a bond, you're locking in a 5% yield, which appears good against the CPI, because the CPI, of course, is, calculated by the government. So the 5% yield looks very good. Oh, you're making a real yield compared to the CPI. But the CPI is not you, right? The CPI is not your spending. It's not what you spend. Right? What you spend may be more or maybe less than the CPI. If you live in your parents' basement and just play video game and eat pizza, your CPI is not even going to be 3 or 4%. It might even be less because you get coupons or whatever. But if you're into living in a safe neighborhood, living in a house in a safe neighborhood with an okay school district, if you're into that, yeah, your inflation rate is much higher, much higher than the CPI. CPI is flawed, in my view. So Buying a bond is you're locking in a promise to get some money back 10, 20, 30 years from now. Right, you get your principal back for a coupon that is not even close to what the debasement is in the best years. In the best years. Like for the longest time, prior to 2008, we had debasement in the 7 to 8% per year. That's not even 7 to 8%. So you're locking in a loss. You're guaranteeing a loss. And that's typically how I talk about Bitcoin on this channel. I talk about it as a bond alternative because, I don't have a technological. I mean, I have a technological crowd following me, but I'm not a coder myself. We're not into coding. I assume in general. I mean, some of us maybe, but I think it speaks to us more to understand Bitcoin from a bond versus stock conversation. It's gonna be stocks versus bonds versus Bitcoin. Bitcoin is a new asset class. That's the new asset class out there. And that alternative, in my view, Bitcoin is going to take a lot away from bonds. Because I believe personally, fundamentally, that Bitcoin is safer. Bitcoin is safer than bonds. Let's not confuse volatility with upward volatility, if that makes sense. So volatility is a good thing if you want to have upward volatility. And upward volatility is what you got with Bitcoin. It's tremendous upward volatility. You need a log chart to even make sense of the price of Bitcoin. If you don't have a log chart, it doesn't make any sense. Very similar to a stock like Tesla. Anyways, bonds compensate you 5% to be a willing victim of monetary inflation, which I guess is a little better than keeping cash in the bank. A little bit better. Yeah, for sure, it's a little better. But there's fun activities that I recommend. I mean, it's funny. That's kind of what I do for fun. Although I don't do it anymore because I've done this stuff. I followed this stuff for a long time. This is an interesting article you can read. Charlie Munger, one of the biggest haters of Bitcoin, calling it rat poison, also says at the same time, any currency will be worthless within 100 years. So the ambivalence, I cannot understand the ambivalence of someone like Charlie Munger. This is more interesting. I love Sears homes. If you live in older towns in the U.S. and try to go around and look at Victorian homes and look at the homes from the early 1900s, many of them are Sears homes. The Sears catalog. Like a town I recommend if you want to see some beautiful homes from that era is Galveston. Galveston, Texas has some very nice Victorian homes like this, and a lot of those are Sears homes. And so this is from the 1908 catalog. So from the 1908 catalog, bring to front. This was a Sears home in the 1908 catalog. So a lot of people were very handy back then. They would build houses with their neighbors. Their neighbors would help them. Land was at near zero cost, by the way, back then. It's still the case. I mean, depending on where you live, but still when you live today, most of the value of the house is still the house itself and not the land. The land is valuable in some areas, but it's more specific to your area. But anyways, this was $725, and they would ship it to you by train usually, and you would pick it up at the train station. And this including everything, including a wood foundation, $725 in 1908. And of course, if you had to pay someone to build it for you, it was $1,100. But not everybody would pay people. They would just, people were very neighborly back then. They would just help each other out. So anyways, let's call it $1,000 for a very nice house like this. By the way, arguably a much more beautiful home than a lot of the D.R. Horton's homes you see today. And this is actually very interesting. This home right there is from the late 1930s. So right after the 70% devaluation of the dollar by Roosevelt. And you can see the price between the 1930s and 1908, it already went up quite a bit. It went from $725 to $1,700, right? So this was $1,700. So we already saw quite a bit of a debasement between 1908 and 1930s, the late 1930s. But look at this. This is the Crescent. This is a very nice home, 5 rooms, neat porch. Again, very beautiful. I believe more beautiful than a lot of the homes, brand new homes we build today. And this was $1,700. Probably at $500 or $600 for actually building it back then. So let's call it $2,500, maybe $3,000 tops for a house like this. And of course, today, this is actually a screenshot from 2019. But today, that same house, exact same house, as you can see right here, is going for asking price of $375,000, assuming you're not in a depressed town, right? 375. So we went from, your family home being worth 700 to 1,700 to 375,000. That's why I'm like, yeah, I have no issue imagining the average home being 1 million, and then 2 million, and then 3 million, and then 5, and then 10 million. Maybe I'll be 80 by the time we're 10 million. But it is just the nature of the game. The money devalues, and the closest moment I believe the U.S. got this right and got monetary policy in order was in the Milton Friedman era. And again, I cannot recommend this enough. If you can get your hands on one of these old free to choose book, he was the inflation king. And remember, inflation as we mean it today really started becoming a thing in the early 2000s. Before the early 2000s, inflation was typically implied that you meant monetary inflation. Anyways, very bright man, and you'll see that not much has changed. Not much has changed from the 70s and the 80s. The Free to Choose was a series that he had that you can find on YouTube. So anyways, the more of a long-term thinker you are, the more returns are dictated by the denominator, in my view, not the numerator. If you think 50 years out, it's really, really tough to predict anything 50 years out. But one thing that you can predict is human nature, and what has been happening to monies and currencies over, frankly, since the Medici, so over 500 years. But before then, you had a milder version of that. Before, with the Romans and coin clipping and Romans clipping coin in the Roman Empire, you had your own separate thing. But the only bet that you have that's left, in my view, is the denominator. Like making sure that whatever you buy is not going to be impacted by the denominator itself. And that's why we say 1 Bitcoin equals 1 Bitcoin. Because if you have a system to make sure that your Bitcoin is still going to be there 50 years from now, then it's very, very special, because you don't have to do anything but to just hold it in your brain in the form of free speech. Just forget about it, and then 50 years from now, maybe you get those 12 words back out of your brain, put it on a piece of paper, and maybe you spend it, maybe you pass it on to your heirs. Who knows? Or maybe you donate it by not spending it ever, and you reduce the money supply and you create deflation and value for everybody. And by the way, I just want to point out that it just happens so that Bitcoin is this fixed asset, this hard asset, this very hard money. If we had, say, a nationwide ban on the construction of new houses, you could say one house equals one house. Right? If you had a nationwide ban. No, we don't have that. We build about 1% new homes each year, and homes, of course, have other issues like maintenance and roofing and insurance and property taxes, which means that really you're going to have some decay on your home. I mean, it's reasonable to see your home having a 5% decay each year, right? So you have 1% of property tax, 1% of deflation because new homes are getting built, 1% for maintenance, 1% for insurance, and then 1% for, interest, for example. And it's easy to see. I mean, it could be more. It could be more. Homes have been one of the best investments out there, one of the hardest investments out there. But today we have harder investments than homes, and that would be Bitcoin in my view. So that's why I prefer Bitcoin over real estate. But houses have other advantages. Like one of the chief advantages of a home is that you get to live in it, and you got to live somewhere. You're not going to live on the street. You got to live somewhere. So if you look at your monthly expenses for owning that house as a rent or as a rent proxy, then yes, the house itself stands as an investment, because the 5% you pay is that proxy for your rent that you're not paying to someone else. So homes have been a good investment. The problem with printing more homes at 1% is that we print way more dollars. We print 15% way more dollars. So That's why you can closely track this to the Case-Shiller index. Now, what about Bitcoin? What's the inflation of Bitcoin? Well, this is an old chart that I found, but right now the inflation of Bitcoin is 1.8% annually. So right now you have 1.8% new Bitcoins that are being issued. Most of the Bitcoins have already been issued, by the way. But right now you have 1.8%. You have 1.8% new Bitcoins issued annually. Now, what's happening in April 2024, right? The Bitcoin halving. So the new inflation rate in April 2024, when you mine, you get the new Bitcoin. The new Bitcoins that you get when you engage in Bitcoin mining, it's going to be halved. So you're going to get 0.9% inflation. Bitcoin inflation, right? Monetary inflation in the form of Bitcoin. You're going to get 0.9, and then in 2028, 0.45, and then 0.22, all the way until the last Bitcoin is issued in 2141, I believe, when the last Bitcoin is issued, and then you will have only 21 billion Bitcoin. And so this is coded. This is coded in the algorithm. We know there's no more. There's not going to be more. You can't change the algorithm. And this is a deeper conversation, but you can't change the algorithm unless you have so much power and so much compute that it's not even funny. You can't do it. And by the way, if you lose your Bitcoin, congrats, you've created deflation. If you decide to make your Bitcoin disappear when you die, congrats, you've created deflation. Anyways, it's fascinating. It's a fascinating asset to me. Bitcoin is money as code. And mining is essential for Bitcoin because you want to keep it thermodynamically sound. It has to be thermodynamically sound. That means it can't be corrupted without spending an amount of energy that is impossible for anybody to spend. It's impossible, and I'll show you a few videos that I made about this at the end of the slide. It's not possible at this point, today, to come up with enough compute to change the code and create new Bitcoins. Technically, you could have a double transaction technically if someone was able to stealthily acquire enough compute and enough power to do it. But at 5% of the power of the world used to secure the network, you have the security of the biggest nations that protect your string of 12 wards in your head that own your Bitcoin. So it's really, really strong stuff. Bitcoin is money without a bank, and it's essentially it's also final settlement without a bank. Right? There's no reversal of transactions with Bitcoin, which is one of the major features of this asset. If you use a credit card, you may know that transactions can be reversed up to almost 2 months, right? Bitcoin is open to anyone. You don't have to be any age. You don't have to be from any country, any gender, whatever. You don't. If there's no discrimination, anybody can use Bitcoin anywhere, anytime, and transactions cannot be censored. You can always send a Bitcoin to someone. It can never ever be censored. It's a revolution as big as the internet. That is my view. And keep in mind, this is a long-held view. It's been 9 years, going on 10 years. It's a long-held view, right? I'm not saying this because I found out about Bitcoin in 2020. Anyways, the wise thing to do, in my view, is to hodl, as they say in Bitcoin, to hold your Bitcoin until you live in a world where sellers only accept Bitcoin. That's the wisest thing to do. Hold it until you live in a world where a seller of a good or a service will only take Bitcoin for you to pay for that good or that service. For now, the dollar is in its spending stage. The dollar is what you want to spend, in my view. You don't want to spend Bitcoin. You want to spend dollars for now. That's the way I look at it. So what some people might say is, so what's the point of an asset you never intend to sell? Well, the point of this asset is that you want to hold it until there is a transition out of fiat. And fiat is part of the problem, the proverbial way we call fiat. But really, under the hood of fiat, the problem is fractional reserve banking is the problem. If we had full reserve banking, we wouldn't have a lot of the issues with the monetary expansion that we're seeing the bulk of the monetary expansion that we're seeing is done through the commercial banking sector, who do fractional reserve banking, which allows them to create money out of thin air whenever you get a loan. That's the whole point of fractional reserve banking, is the idea. You're betting that not all savers will come at once to lend more money than whatever the savers deposited in the bank, in a nutshell. So, in my view, and this is just my view, no lifestyle advice, no investment advice, but in my view, borrowing against Bitcoin for now is the only way, if you are so inclined. If you are so inclined, it's important. It's the only way to benefit from some of the purchasing power of your Bitcoin. It's the only way, borrowing against your Bitcoin, to have access to your purchasing power that you've acquired by buying Bitcoin without foregoing some of the benefits. But really, right now, your compensation, if you're trying to borrow against your Bitcoin, really you're paying for it in the form of risk. You're paying for it in the form of risks. And in my view, I do not believe that the crypto rails currently as they stand, I would stay away. I wouldn't do it. Either that or I am not enough in the day-to-day of everything that is going on with crypto, with Bitcoin assets trading on other blockchains. To me, it's blurry, and I don't have the time to invest. And because I don't have the time to invest in understanding all of this, at least to the level of detail where I would be comfortable placing Bitcoin on another protocol and borrowing, say, stable coins on another protocol, which you can do, I would just stay away from now. I would just stay away from now, because that's when a lot of hacking happens. So just stay away, offline, entirely offline. Brain wallets to me is the way to go. But I believe that if one wants to benefit from the safety of the fiat world, so, quote unquote, right? Safety, quote unquote, of the fiat world, and that's safety against your own technical blind spots, is what I would argue, because there is technical blind spots. If you've never used a MetaMask wallet, and you're trying to do some BTC, anyways, you could have a blind spot. That's the way I view it. So in my view, if you own MicroStrategy, a stock like a MicroStrategy is what I call a layer 4 Bitcoin. So it's layer 4 because you're 4 levels removed from the ownership of the Bitcoin, right? Layer 1 is a brain wallet. Layer 2 is the Lightning Network and Lightning, right? Layer 3 is owning an asset that owns Bitcoin outright, which we never own stocks outright. Who owns stocks through computer share? I don't own a stock for computer share. Do you? I mean, no. So it's 4th layer Bitcoin because it is your broker who tells you that you own the stock, who holds the Bitcoin for you in its pure form and not in its Lightning form. So that's why I call it layer 4 Bitcoin. But layer 4 Bitcoin trades on fiat rails. And so if your Bitcoin in the layer 4 form, i.e. in the form of a stock, or like IBTC, right? Why is the stock going up right now? Why is MicroStrategy up? Why is Bitcoin the asset up right now? Because IBTC may be coming, at the end of this year, beginning of next year. I don't really care about the timing because, I don't want to sell for 50 years. But because IBTC is coming, like the big question is IBTC will be trading on fiat rails. So you'll have access to Bitcoin through fiat rails. And this has some advantages. One of the big advantages, of course, is the strategy that billionaires do, which is, essentially the buy, borrow, and die strategy, right? So if you are in a hurry to enjoy your Bitcoin, you can own Bitcoin in 4-layer form, and then you can do some margin or some pledged asset line or whatever you want to do against your asset that is Bitcoin. And if you do it prudently, right, if you do less than 10% leverage, on that. You know, a lot of people are betting that interest rates will go down, and so are we going to get margin rates that are back in the 2% or under 2%, even if you have a privileged relationship with your bank? I think it's very likely, right? I mean, you all remember people borrowing on margin at 1.7, 1.6%. I can't remember how low something like Interactive Broker went, even lower than that. So the buy, borrow, die strategy is the way. Like, if you wanted to have economic access to your Bitcoin right now, that would be the way I would do it. But as you know, for me, I'm very happy knowing the 12 words and just forgetting and going on with my life and talking about stocks and discussing about business and business strategy and Tesla and Enphase and technology and the future, without really talking about Bitcoin, because it is a different crowd. It is a different crowd. My channel tries to cover both, but it's tough to make the BTC crowd talk to the growth stock crowd. Just bring up the name of Elon Musk to a bunch of Bitcoiners, right? Ever look Max Kaiser? Max Kaiser, when you bring up Elon Musk to Max Kaiser, there's a lot of tribal behavior. There's a lot of anyways, that's just the way it is. So there's too much to cover about Bitcoin. Let me just spend a minute to promote very old videos that were in the early days of the channel. So of course, nobody was watching my channel in the early days. That's understandable. That's what you get started. This is a video where I explain mining. So it's called Bitcoin is Property Guarded by Code in the World's Largest Computer Army. I had a whopping 83 views. I'm very grateful. And I have two other ones. Don't pour water into my wine. Why Bitcoin is a protection against USD inflation. And I have this other one about why Bitcoin is my bond alternative. You see, I had 105 views on this one. So anyways, they're kind of the same style as this. I still had my avatar back then. Anyways, this is obviously, we're still on the edge of investing, if that makes sense, right? We are talking about risky stuff here. So this is obviously not investment advice at all. No investment advice whatsoever. This is just entertainment, right? Bitcoin is still an asset that is considered out there. So no investment advice. Please like. Please subscribe. Please follow me on X if you can. I appreciate you watching the channel. Thank you so much and have a wonderful day.